What is up, boys? So tonight we're gonna talk about MMTLP and MMAT again. And for those of you who don't know, we actually have a Discord channel that you guys can join. And as a matter of fact, I'm in a Discord channel right now. So in the main chat, we talk about stocks and a lot of other things and, jokes around a little bit and everything. And if you look on the left-hand side of the screen, you will see oil code and MMATLP. Sorry for those of you who used to be here, and we just put a bunch of assertions and calculations and everything here, but we barely actually show a lot of documents. We actually have original document of certain leases. We have all of the torches, previous investor deck, PV10 well sort of annualization, valuation, and all this kind of stuff. And the thing is, we just didn't really index it really well, and there are a lot of other information in different channels. Guys, we're new to just Discord, so if you guys have any suggestions or advice, we would love to listen to you guys, because we actually compiled a lot of information regarding this, and we have a residential oil expert who's been working in this industry for at least 20 years. And yes, everybody in my Discord mainly is older than I am, and they have a lot of different industry, let's just say expertise. For example, Bronco, anything oil related, oil development, energy, it's him. We also have a very interesting chemistry guy. We have an NFT guy, and we actually have a manager of a private family fund in our Discord too. So sometimes they come out and answer questions. Sometimes they tell me that, hey, there's some questions that you should ask or you should answer, because a lot of times, I'm too busy doing other things. So you guys are more than welcome to join. And tonight we're gonna go through a little bit of a lot of the logic that a lot of you guys have, and I will quote all of the sources where I get these numbers from, and where you can basically redirect all these numbers to those documents were official documents. And then the future of the oil sale dividend isn't that great. Let's just put it that way. So let's take out our little notepad here. So as we all know, Hazel's working interest or workable acres is 9,762. Okay, so how do we find that information? Let's see. We have so many things opening up. So right now, well, let's see. This is Orogrande one. So here we go, the Hazel one, right? So first of all, we have to figure out, how much the Hazel valuation is. So in here, we have the Hazel valuation, as you guys can see, the 2.897 million, right? And then we also know that they have accrued revenue expense that they have to pay for third parties, 5 million. So it's already a negative ROI per se. And also another thing that you have to understand is this line here. So I'm going to read it aloud here, okay? Since the remaining obligation to reimburse MHP exceed the PV10 value computed by our reserve engineer, the net value of the company's reserves associated with Hazel wells in this place. Although no reserve value is attributed to the company, we have presented a table below to disclose the reserve calculation detail. So essentially, what really happened here is, god damn it, where is my thing? If we look at all the real reserve data, we will realize that in reality, even if we deplete all of the proven production of this piece of land, this will never produce anything near the $2.9 million valuation of the land. And not to mention, this MHP actually pays a option of more than 200K to sort of like enter into pre-agreement to buy this land, and didn't exercise that. So basically they just wasted about 200K to not do the option, because they realized that it's totally not worth it to buy in this land, because it probably won't produce that much oil as they quote unquote predicted or as they evaluated. And if we go look at towards previous, before the merger, there's a document coming out, and it indicates what's the net mineral acre of the Hazel project. Is 9,762 is right here. So this is how we get our data here, okay? So we have the total acreage of 12,000, right? So how do we get our total acreage? Our total acreage is actually from a press release from Torch before, and because Torch took their website down, so we only can do it through a third party, and we all know like these things are actually quoted. So all of these are literally quoted stuff. So essentially what Torch said is, hey, it's 12,000 gross acreage position for the Hazel project. So we do the discount, we figure out that land discounts is approximately 0.8, and we even discounted less than we were supposed to. And Hazel's proposed value is 2.897 million, which we already talked about in a previous 10K. Let's see, this is the dividend part right here, 2.897 million. Okay, because you guys are like, yeah, you don't present any of these assumptions. I give you guys, all of them are from 10K. All of you can read it. It's just that you guys don't read it carefully and you think everything is positive, but in reality, it's not. And then, so the real Hazel value is actually 2.9 million minus 5 million, right? 5 million is right here, accrued expenses. And also, they also said they haven't included all of the accrued interest, and they haven't included all of the accrued development cost, right? If we go back and look at this page, which is a press release from 2016, it talks about how many test wells they're doing and everything. The company believes that its next Hazel project well will range in cost from 4.5 to 5 million and yield similar economic result. That means the previous wells all cost around $5 million or less than that. Let's just say it's $2 or $3 million. And then they have, let's just say they only have 4 testing wells, or in here they talk about number 1 and number 2 testing well. Let's just say they only have 2 testing wells, even up to today. So if you add that up, that's about $2 or $3 million. So that's already $8 million in total expenses over here, and we haven't even included accrued interest and other developmental costs. So this investment project is totally a flop, and we didn't use and keep in mind, okay, when we talk about dividend, those expenses and interest will come back into play, because there's a hidden line there. They talk about when they talk about minus oil expenses, they're talking about minus oil expenses of all the entirety of oil and gas exploration, which include previous projects. Okay, so from all of these, we realize that, hey, the per acreage net is, so every net acreage of Hazel worth about $296 per acre. Okay, no problem. This math, right? You guys can double check or whatever. Okay, let's look at Orogrande. Okay, so assume that there are 172 acres, but those are not net acreages, right? So how do we find 172,000 acres? So how do we find that is, if we go to, where's Orogrande? So we go to the same 10K file, which is the most updated. For those of you who are nailing me on looking at previous data, and we even have a very complex model of laying out why there are a lot of none of those actually numbers actually make sense. In here, you just pick out those numbers and do your own calculations, right? So if you pick out the numbers, there's 172K prominently, basically just acres, right? So 172 acres, and proposed net overestimation by third party. So the proposed net overestimated net acreage from the 172,000 acre is about 133 acres. How do we find that? We find a really trustworthy net. This is a really trustworthy website, and they do a lot of interesting oil acreage assumption and calculation adjustments, or whatever you call those, right? And then usually they overestimate a little bit, so then people will basically overvalue the asset a little bit more. It's like, the valuation game and everything. So if we do the math here, we realize that, hey, so our previous discount is 0.8. So let's do the acreage discount. 172,000 times 0.8 is 137,600. Why the discounted acreage land is more than the third-party estimation? That just means that everybody in the industry believes that Orogrande will be producing less oil than any of the official document posted out by Torch or posted out by MMAT at this case. Okay, and I told you this is already an overestimate, and this is our calculation from our land discount, which is based on Hazel project. And you guys are like, oh my god, Orogrande is going to be better than Hazel project. Sure, why not? We're going to consider that. Okay, so quality of Orogrande projects is going to be less than Hazel, as we established here with math and with documents that we showed you guys here. So if every net acreage is 296.7 $6 per acreage. If we do use the third-party number, we get that the total valuation of Orogrande project is 39 million. You guys are like, no, it's too low, it's impossible. Okay, let's just assume the entire acreage covered in this lease, okay, 172,000 are all net acreages. That means the entirety of this lease can produce oil. The probability of that happening is less than 1% in the oil industry, okay? So if we do that, we do the whole total overestimate of that. We do the same math, we get $51 million valuation for the land. But interestingly enough, you guys are like, oh my God, it's so low, there's no way. Oh my God, oil increased about 50% over the past, 6 months or whatever. Let's just use 60%, right? Because when they're preparing their 10K, they're supposedly using the number that's, ended December 31st, 2021. But because they delayed, so we don't know what their actual base number is. Their actual base number, according to the 10K, was $63, okay, per barrel. But in here, we assume that it increased by 50%. So that means this valuation is based on oil price of $120 plus. Okay. So that gives us a $76.5 million total valuation of Orogrande projects. And according to Bird Lady, right, 165 million shares. So 76.5 million divided by 165 million shares, that gives you $0.46 per dividend. Okay, so your dividend will get $0.46 per dividend, right? Per share, whatever dividend share you have. But those are not including any previous account deficit. And if you go look at their account deficit, you'll realize that even if all of these valuations becomes true, there is no way that you will get that much of a dividend. So this dividend is actually overvaluation, because if you go and look at where was the other thing? Where's the other thing? So essentially, if you go look at dividends, right? Holder of Series A preferred stocks are entitled to receive assets from oil and gas sales. Prior to declaring paying any dividend, the company will deduct, this is very important, the company will deduct from gross proceeds of an ONG asset sale, various sales, and expenses described in Series A certificate of designation, which include, among others, costs and expenses the company incurred in connection with applicable ONG asset sale transaction. Costs the company incurred following the consummation of agreement with respect to the asset, and tax in combination of these assets, right? So that means also in addition, the company will also withhold 10% of the total proceeding from the ONG asset sale to cover potential cost closing liabilities. All right. So even if this number is true, that means automatically, because they have account deficit and they have a holding clause, that means 76.5 million divided times 0.9, that means 10% in reserve, right? Your everything in play is about 68.85 million here, okay? And if we also include well development cost from previous projects, or even just from previous projects, is more than like all the wells and payroll of Hazel. And remember, they haven't paid a payroll at all. And we can show you guys, if you guys are really interested in all of these financings, it's actually in the previous 10K that they had beforehand, like right at the merge, or AK, whatever you call that, or 10Q in that case, right? And also well development cost from Orogrande to just operate the lease. So according to our previous video, we talked about the 15 million cost, right, of that, development of wells. And we still have to plus the previous 4 wells that already failed. And every well, let's just underestimate the cost of the well. Let's just say every well only costs $3 million to make. That's 12 million. So in total, we're talking about 27 million incurred liabilities. And these need to be deducted from your total valuation, right? So 67.85 minus 27 million equals, I'll just use a calculator because you guys don't trust my math, apparently. That's 41 million. I think A6, right? A5, okay, A5. That's almost half of what we were expecting. So literally what our dividend just got cut down to about what? 0.23? Somewhere around there. Because we also underestimated how much cost that they incurring. And also plus, right, payroll, right? They didn't pay anyone yet. Plus payroll. So literally 0.23 is gonna be your dividend payout even if it got sold out. And you guys are gonna be like, oh my god, like it's so many barrels of oil under there. There's no way it counts like this. Okay, so next video I'm gonna debunk your theory and say, hey, there are 3.2, whatever, right? Even if there's 4 million barrels of oil buried underneath, we can actually calculate how much cost does it, how much cost, like how much money does it take to actually extract that oil, and how many months and years does it take to deplete that oil reserve. And therefore we can use a interesting model to figure out how much money we actually can get from that piece of land. And because the oil industry have its established cost of capital structure, you will see that it actually costs a lot of upfront costs to actually put up the operation. And because the land that Orogrande produces does not fulfill the requirement of all the big companies requirement to actually, their requirement is like they're set to operate, and Orogrande is not set to operate. And for those of you who want to research this, you can do this thing called wildcatting. Okay, wildcatting oil reserves. It's a highly volatile and highly risky business. And in this case, the probability of the wildcatting success in Orogrande region or Orogrande project region is actually extremely low because of the oil porosity or the land porosity of the geothermal or the geostructure of the land. So if you actually go back, I don't know if you guys really want us to go on a scientific tangent and explaining to you guys why the geometric sequencing of the land is actually really bad for drilling. And we can even invite someone who actually done this before, come in and say, hey, it's really bad. And the way they're setting up their vertical wells is actually not going to be very useful. So we anticipate them to set up 4 more wells to even establish a baseline of a preliminary workable producing oil procedure. So then that, if you add the math up, that's literally about 27 million or even more than that. It's more like 35 million already down in the hole, and Bird Lady called that sunk cost. But in reality, all of those sunk costs will come back and bite all the shareholders because of this clause in the 10K. So all of you will get nothing, period. And we're not financial advisors, we do not give financial advices, and therefore everything we say on this channel is for shits and giggles. See you guys on the upside. Hope you guys like this kind of video. I know it's sort of like a desperation for you guys. It's all despair for you guys. You're like, oh my god, I'm holding this useless asset. But I mean, it happens for everyone, right? If you don't look at the 10K or a lot of the announcement and you just take it for granted, sometimes, making an investment that way isn't a really great idea. And at the same time, if you guys are asking, a lot of you are asking this question, like, if why are John Breda and why are, Maccabee, why don't they sell off their MMTLP shares? Well, first of all, you don't know if they did or not, because how the companies were structured right now. We only know that they hold public disclosed MMAT shares, but did they really sell the dividend share? You don't know. Can you trust Twitter? Sure, you can 100% trust Twitter if you are, but I choose not to. And because how the OTC market operates within itself, without sort of like a certain amount of collateral shares, they cannot properly start an OTC listing. So whoever provided the first 5 million shares are the person who essentially mostly liquidated their position, or they basically use that position as a collateral for the market makers to make the deal, and then they will take interest from that deal from the market makers. Okay, if you guys want the explanation of that, I will make another video if you guys make enough comments or like this video enough. But again, the only reason I'm covering this is because a lot of you used to hold this, and I used to be a proponent of this stock for better or for worse. But about 6 months ago, or about somewhere around 6 months ago, or in March, or even earlier than that, I started telling you guys that it's actually a horrible idea to invest in this company, and the entire community backlashed on me. And even right now we don't understand, because we present very sensible, truthful content, and all of those are from their official documents. I don't know where Bird Lady is getting their numbers and getting their assumptions. We actually do. Sometimes we speculated what they did. But again, we are actual finance professionals. At least we work in the industry, and we've been basically doing finance work since like when we were really young, right? Even during college. So we would say that we have more credibility than all of the other, let's just say, amateurs. Okay, see you guys on the upside, and hopefully this video helps. All right.